Hello everyone. This video is going to be a little bit different than the videos that we usually do. A few weeks ago in Miami, I had the opportunity to sit down with Mr. Philippe Ghanem, the CEO of SquaredFinancial. We engaged in extensive discussion covering a range of topics from the well-known Swiss National Bank event back in the days to the booming of AI and more. Here's what he had to say about the current and the future landscape of trading and finance.
Let me share with you a little bit how it went, the Swiss National Bank intervention, and how we managed it at that time. And I think you were there also in our offices. So it was quite a surprise. We went through it because we anticipated not any intervention that substantial, but we had sophisticated clients that were long Euro Swiss at that time, and just keeping the position. And also we had substantial customers trading dollar Swiss. So we increased the margins quite, I think, between 5 to 7%. So customers were not really sleeping with enormous positions, and we were well funded at that time. And we had some cash-to-cash customers on those positions. I was informed about 8 minutes. I had about 8 minutes between the time I was informed and I was in the office. I was having lunch. So you can imagine the call. The Euro Swiss was 121.20, 121.10. Next price 119, 118.50. Practically the robots came in, no liquidity. You have to understand the LPs, what they do between the intervention of the human side, the intervention, the trading floor, plus the algos were just spreading largely the spreads. We're not talking about one figure, we're talking several figures of spreads to be sure that customers don't do any arbitrage or start trading. But this would trigger what we call margin calls. And when you have margin calls, you have immediately our, let's say, APIs would just send enormous amounts of orders, millions of orders to different kind of LPs or to our prime broker that would just accumulate in a very narrow highway or in a very narrow tunnel of codings. And this was the main issue. So I arrived to the floor. I had Brian Seegers, I had Dominique, I had Omar, I had Paul Webb leading that team, and we were there looking at what was happening, and the whole company was vibrating by what is going on, because they were seeing the people running around, customers calling, because of course you can imagine that other crosses and other currencies were moving all around from the sterling to the yen, and people moving to safe currencies, if not gold at that time. There was no atomic bomb in Switzerland. There was an email or an announcement that was done. So we immediately understood the situation. So what we did, we unplugged all the LPs. We asked all our customers to face us. They wouldn't know the customers who they were facing at that time, but we were facing them. We increased the spreads. We wanted the dust to settle, to have a conversation with our customers, to see what we're going to do and how are we going to deal that in the best interest of the institution and the customer. The good thing is, then again, the story paid off at that time to have a big capital, geographic position, strong management. So we were able to go through that situation during the day. Each time we were reevaluating our liquidity, our customers' situation, and our situation. The thing that surprised me is how other counterparties were not ready. So yeah, when you ask me how I would do the things today, would I have done something differently? The only thing that I would regret is that at that time, if the board and I had a different mindset of saying, okay, we're going to grow non-organically and accelerate our acquisition mindset, we would have gotten not only, so we did MBOs, so we were able to acquire some great people through that event, but I would have preferred to acquire some institutions that were pretty very cheap on that 3 day after the post SNB. So that's the only regret. The rest, we made money at a certain point because we were able, this is where the market making department started to intervene. This is where we were able to have other parties pricing us and being able to offer our customers dollar Swiss or euro Swiss or other Swiss yen, any pairs related to the Swiss franc, because people wanted to go short or long at that time. It took us a few hours to be able to find some pricing because we didn't want to price it on our books. We were already exposed by our customers' exposure. But this is where we made money, but that was not the priority. The priority was to safeguard the institution and safeguard the customers. And then at that stage, we were able to have a conversation with customers that were shocked. Some of them, they had 10,000, 20,000 or 100,000. They found themselves minus several, maybe millions of hundreds of thousands that they don't have. So we were able to explain them how we've dealt with it and how we're going to deal with them and their account. And this is where I think that the ADS DNA came, where you have a strong partner next to you, strong geographical position, because Abu Dhabi is and was at that time an extraordinary geographical position to be able to offer a very strong liquidity at timings that liquidity was not available. And both liquidity and technology and people were available at that time for any institutional to high net worth customers that wanted to trade. So it all played in our favor. And also the team were extraordinary, being able to go and call customers, new customers. Of course, yes, there was a big opportunity. There was an enormous opportunity for us. And we grabbed that opportunity very strongly by saying to new customers or new talents that join us, listen, we're there, we're strong, we have 1, 2, 3, 4 available for you, and this is where we started and launched ourselves. So yeah, we're here now. Look, why Miami? Why the US? So it's again a continuation of our offering to our international customers, and also the most important, we believe we have a know-how that we want to bring here. We want to bring to the US market. We want to be sure that we offer our excellence of understanding those markets and understanding the agency business, to be sure we propose to our clients a broker business and a technology and a service that they will appreciate. And I think from the feedback that I got from my trip and the establishment of an institution here, establishment of technology, establishment of people, yes, we have decided to come and open a company here. So I can't tell you more at that stage. We're still moving forward, but the decision has been made, and it will serve our customers in Europe and serve our potential and future customers in the US, to be sure we offer a service that will serve the interests of our customers. So we will stick to the agency business here for now. Most probably we'll start by the local market, local stock market here out of the US, and then gradually grow to offer all kind of services. And the motivation, so to continue on why Miami, is on the technology side. We're seeing extraordinary presentations. Tax-wise is very interesting. People are here, people that want to work, doers that want to work hard. And we also have been discussing with customers that are motivated to see a new provider or an additional provider to the other providers. And we feel quite welcome from New York to Miami and the whole US, but mainly Miami for now. I think this is where the trip is going, and we will start from there. AI has been there, but the hardware has evaluated strongly. So you have an accumulation of analysis of precedent that allows you nearly to predict the future somehow. And I think that AI, well managed, with a real understanding of AI, both on the hardware and the software, will allow you to do extraordinary things, especially on asset and wealth management, and especially analyzing trades or analyzing the trends of customers. Say you want to be sure you offer your customers the best product, so you want to be sure that to know what they really want and what they really appreciate, and this is where AI can do an important role for us in the industry. On the backside of an application or a mobile application, it is imperative to have AI on your codings. It will only allow your mobile application to mutate and evaluate according to the pressure of trades that are coming, the pressure of demands of customers, and the pressure of the whole logistic of the communication between software and hardware. Sorry, I went a little bit in the details. I can go a little bit more if you want, but at this stage, I think that you understood what I'm trying to say. AI is important for democratization and decentralization of trading. We also saw a growth and a slowdown on the crypto side. Again, we go through that on saying tokenization of currency, digitalization of assets. This is where we're going. This is where we're going to see much more volatility. Now, are we going to tokenize a euro? Are we going to tokenize a dollar? I wish that we go through that. I think that it will allow volatility to grow. I think that it will allow customers and institutions to have more transparency of what's going on with the tokens, or clients to have a clearer view of where the market is going. And it will give accessibility and buying power to customers, or consummation power, if you start seeing more tokenized currency along the way. So financial institutions need to be ready for that, and I think AI is and will play a bigger role. So yes, I've been hearing interviews right and left about how AI can be frightening, where systems would communicate to each other. Well, we always wanted softwares to communicate to each other, to correct themselves, to enhance implementation and integration of new systems into institutions, from medical side, hospital, analysis in laboratories to find cures for medicines. I'm giving an example. But AI, if it is well managed, well understood, which I believe it's starting to be, will only enhance and make things simpler for us and our generations and the generations to come, and the growth. Where a big role, where it's important, is to have those big AI institutions placed in countries with a strong rule of law and a strong enforcement law for customers to feel secure. Look, the industry is quite interesting. So you have fantastic companies and that I'm seeing between the Middle East, Asia, and Europe, US. But also I'm seeing a quite competitive offering that is not profitable. I think the industry was hit with a massive demand for trades, lots of volatility. Technology, I haven't seen an enormous evaluation in technology in terms of the mobile applications that were proposed. You still have a bid and an ask and a button buy or sell. I've seen bigger brokers becoming very big, and I think they're going to diversify in tech providers. The other thing that I'm seeing quite important is that from the banking side, a lot of banks are just closing down accounts and closing down prime broker accounts. And this is where I believe that there is going to be a recalibration of the industry, where you're going to have guys that know what they're doing, that will grow out of and be able to offer a different kind of offering to customers, from prime brokers or custodian, or continue on the agency business. Now, do you need substantial liquidity to be a broker? Yes, I think if you want to be a market maker, you have to be substantially solid. Costs are high. There is a lot of ego, and then you have also started to have a bid and ask for talents, where people are trying to move their business from one way to the other. And what I like about what I'm seeing is that a few people are really focusing on what the customer wants and what's the tipping point for the customers in terms of service. There are a lot of selfish institutions and others that are doing their best to offer their customers. So there is going to be a recalibration, and I think we would see bankruptcies and mergers maybe, and MBOs that will come. So the interesting things will be much more volatile in terms of the companies that do agency business. Along the way, those next 2-3 years, movements have been quite radical, both in commodities. We've seen gold very volatile and very strong moves out of the Middle East on traders trading gold, and offers that institutions have been doing to those customers are simply not profitable, and the ethics of the industry has been damaged by an abundance of losing offers that certain customers have abused, and this is just a passage. It's not going to be long term. There is always a gap that people abuse in, and this is where the clever ones will be able to push it away or find a different kind of offering. So I think the agency business long term is only going to grow. I think technology is going to allow things to be much more profitable for certain robotic asset managers. The other thing that I'm also realizing is that a lot of people want to come in that industry, but you have to be cautious in two things. One, as an owner, that this is a risky business and a costly business. Two, as a client, just don't over leverage, because the market doesn't owe you anything. It can move the way it wants. Just be cautious and be close to your leverage and position. And the company you trade with, be sure that their mindset is solid and clean, because you never know. You might have a very big company, very well capitalized, but their mindset is to take your money.